Welcome back, everyone. Today, I am going to be discussing my thoughts on your energy or UR energy. Whenever I'm talking about something like this, I just want to get my bias out of the way, and please don't attack me for this. If you want to discuss it with me in the comments or whatever, that's fine. Don't. I just wanted to say that I've never liked 232. I disagree with many aspects and premises of it and some logic, but whatever. Um, that being said, the CEO of Your Energy was one of the originators. So when I think about this stock or when I analyze it or look at it and think about what they're trying to do or if I should buy it, um, this is a constant issue for me when I'm thinking about it. That being said, I think as a CEO, he's a fine to good CEO, maybe a great CEO, but I just disagree with the way he may be going about doing it. So I just felt like getting that out of the way. So most of the companies that I've discussed in these videos have not been producers. Now that's because there are not a lot of producers left due to the low prices. And this company, Your Energy, is a producer. Now, producers come with their own set of time-sensitive value propositions. On one hand, they, assuming they're unhedged, get quicker benefit to increases in the spot price. And on the other hand, they're doubly hurt by continuing low prices. Why are they doubly hurt? Well, they don't get as much out of their assets and they dilute their assets. So they lose money or make very little profit while diluting their assets in a low price environment. Now, before I get into talking the uranium aspect of UR Energy, I first wanted to mention that there's a very interesting ace, I guess you could call it, that they have, and that is they are approaching a market cap where the Russell 2000 or Russell 3000 would be forced to include them in the indice. Now, if they were to reach that point, then it would probably come with a wave of indiscriminate buying on the part of the indices who are now forced to include it as a stock, as a component. So this type of thing, if it happened, would be a tailwind pushing the price higher um, due to the buying, in theory. Now, that's good for the investors who hold it beforehand. Um, but once it's passed, it becomes a potential threat, whereas if they go down again, they could be knocked out of the index. So if you are in favor of 232, and again, I have no issue with anyone who does, and I just don't like it. But if you are in favor of 232 and are looking for a US producer that is, well, currently producing, and that would be a good pure play for uranium, then this is, in my view, a decent choice because Energy Fuels now also produces vanadium, so that's factoring into their product or their pricing. And Energy UEC, they currently don't technically produce; they're close, but they also have other assets. So if you're in favor of 232 passing and you just want a lower risk, pure play producer to capitalize on it, your energy is definitely something to consider. That being said, on the same value proposition, if 232 goes against the producers, then it's, in my view, probable that all the US producers would take a near-term hit. Will it last long? Well, that depends how long the uranium price stays in current range. I don't believe that's sustainable forever, and so I think that even if 232 goes against the producers, they're still long-term undervalued. And with that being said, it could feel like a decent sized hit, even though in the longer term it may just look like a blip in the chart. So as of the last time I took a look at your energy, their financials at least, they had a limited amount of debt, a little bit, but not enough for me to think of it as a significant concern. And they do also have production and thus cash flow. Their production is fairly small, and much of it is, well, they have contracts to cover um, much of what they were supposed to be producing. So the production is mainly because it's harder to stop production than go back into production. So um, it's mainly a benefit. They have out contracting at higher prices and it's covered, which is the thing to do at these prices, in my opinion. Now, your energy does have a number of lower cost assets, which are quality pounds. There are some pounds out there, pounds of uranium in the ground, that is, that are not quality, but your energy seem to be biased towards the quality pounds. They don't produce much now, but they can, if the price warrants it, ramp up their production fairly significantly if they're let know in advance, they're notified in advance, they can get their production maybe up to 2 million by 2021 and maybe 2.5 million pounds per year in 2024. But they would need to be notified, and by notified, I mean the price would have to go up sooner rather than later. So they have resources in the measured, indicated, and inferred categories of about 42.5 million pounds as of the recent update. Now, this isn't amazing for their market cap. I mean, you could find out there pounds of uranium trading at 20 cents, and here it's a few dollars. That being said, here again, they're quality pounds with better economics. So, will they make more money bringing them out of the ground? Probably. So, in other words, they probably should be valued at a premium to other pounds in other companies with other problems. All in all, Your Energy, I think, is a solid pick as a company. It doesn't have the crazy upside leverage to rising uranium prices that some other names have, but it's a good, solid stock that's based in the US and it's on Robinhood if any of you use that, and it's in a great position to profit if there's a positive result in the 232 decision. So that's really the bulk of what I have to say about UR Energy. I hope you found something interesting in this video and hope you enjoyed. Until next time, have a great day. Hey everyone, just quickly, you can read this here or in the description of any video. Just remember, what I do and say here is meant to be a helpful supplement or thought filter for your research, not a replacement for it. I can be wrong, and I'm often quite early, aka wrong for a good while, which is why none of this is ever investment advice.